Hello everyone and welcome to another video here with Jakara's Finance. Like always, make sure you hit that like, subscribe, and hit the post notification bell so you will know when we are releasing brand new videos. Today we are going to talk about the secret weapon when it comes to investing in cryptocurrency, altcoins, Bitcoin, Ethereum, Cardano, Ripple, Stellar, Dogecoin, or Dogecoin, depending on how you want to say it. We're also going to talk about how you can do the same exact thing when it comes to stocks, whether it's Amazon, Tesla, Google, Facebook. No matter what it is as far as a trading commodity, this is the one thing that newbie investors as well as seasoned investors can benefit from. It is a tried and true investment type of strategy, and it works, and I use it to this day. It is called dollar cost averaging. Yes, we're going to talk about dollar cost averaging today, and we're going to talk about it across the board with different type of commodities. But we're going to start with crypto. We're going to start with Bitcoin and the altcoins. Ultimately, what dollar cost averaging is, for most people that have never heard of the topic, it's when you set a specific amount aside at a given time and you invest in a particular coin or token, or if we're talking about stock, a particular type of stock. Doesn't matter really, because the philosophy is the same, and we're going to talk about why that's the case. So let's take Bitcoin for example, and let's say at the time of this recording, Bitcoin is trading at around $46,000 per coin. So let's say you have a job and you get paid every 2 weeks. Now, when you get paid, let's say there's not a whole lot left over, but there's a significant amount. So let's say you have $50 to invest every pay period, and you say to yourself, I'm going all in on cryptocurrency. I'm going all in on Bitcoin. So what you do is you take your $50 and you invest in Bitcoin the day you get paid. And let's say it's trading at 46,000. And then 2 weeks from now, you get your paycheck again. You take another $50 and you invest in Bitcoin again. Now, what's going to happen more than likely is that the price would have moved, because remember, when we talk about cryptocurrency, and we're talking about whether it's Bitcoin or any other altcoins such as Ethereum, Ethereum Classic, Cardano, Dogecoin, Shiba Inu, Stellar, Lumis, it doesn't really matter which coin we're talking about. The bottom line is there will be fluctuation, because these type of investments are volatile. Now we're going to talk about stocks too, because there's a level of volatility with stocks, but some stocks aren't quite as volatile as others. So we're going to touch on that quickly, okay? But I want to kind of make this video more about the principle and the philosophy of the strategy, and helping you understand that you can take this strategy to more than one element of investment. So again, you get your second paycheck and it's $50 left over. You want to invest, you invest in Bitcoin again, and now instead of it being at 46,000, it's at 44,000, right? So what's going to happen there is you already bought the $50 at 46,000. Now what you're doing is you're buying at a lower dollar amount. So in essence, you're going to gain more access to more fractional coins. Because remember, if Bitcoin's trading at 44,000, $50 is not going to buy you a whole coin, right? Obviously not, because you need $44,000 to buy one coin in that scenario. But it will buy you a fraction of it, and it will buy a bigger fraction than it did the 2 weeks before. So this is the reason why dollar cost averaging is so important. Now let's go ahead and flip it over and talk about it from a stock perspective. Let's say we have a stock that is trading, let's say at $15 a share, and you have $50 and you say, okay, I want a dollar cost average this as well. So when you invest your $50 in that $15 stock, we'll call it ABC Company, you're buying in essence 3 shares, because 15 times 3 is $45, right? And then in 2 weeks, that stock is trading at $17. And you say, well, great, I have $50 to invest again. Now remember, the way that dollar cost averaging works is 2 weeks ago you bought it at 15, now it's trading at 17. So the average of it, because you would then, let's say you bought 3 shares and it's slightly over $50, but now you have 6 shares, and then the average price is what you paid the first time versus what you paid the second time. So in essence, you would be somewhere in the middle between the $15 and the $17, which would normally lie directly at $16, but that's just an approximation. But that is how you can look at it, because what a lot of people talk about is the fact that they don't necessarily want to day trade cryptocurrency, and they don't want to day trade stocks. And there's a lot of reasons for that. Some people say, hey, listen, I have a full-time job. I'm not able to look at stocks every moment of the day. I'm not able to look at cryptocurrency every moment of the day. So I need to be able to have a strategy where I set it and forget it. Well, this is the type of strategy where you can do that with. Now, keep in mind though, it doesn't take away the fact that you need to continue to do your due diligence, because you can't just say, all right, every pay period, I'm going to go ahead and I'm going to invest $50. I'm never going to worry about the price of it again. You need to make sure that key levels aren't being broken up or down, because if they are, then you would need to make adjustments in how you're doing your dollar cost averaging. But if you're finding that you have certain coins that you want to invest in, or certain stocks that you want to invest in, and they're kind of moving in a predictable pattern, then dollar cost averaging by far is a powerful strategy, because what's going to happen is you're going to look up in 3 months and realize you've accumulated X number of coins or X number of shares of stock. And you might find that you accumulated it right at a point before there's an explosion in the actual price of that given stock or coin or commodity. So that's the way you want to use dollar cost averaging. And I strongly suggest it, whether you are a newbie, whether you're someone who's been trading for a while and kind of gotten away from it because maybe you got into the fun of day trading and seeing money come into your account minute by minute and second by second. But dollar cost averaging is something that you definitely want to keep an eye on, especially for the mid and long term. Alright guys, so that's it for this video. We hope you enjoyed it, and like always, make sure you hit that like, subscribe, and hit the post notification bell so you will know when more videos just like this one is coming out. Till next time guys, we will see you in the next video.